Hi everyone, hope you're all doing well, and today we're going to talk about the 3 companies that I bought this week. I'll go through the reasons why I bought these companies, and the main reason I bought these companies, I won't lie to you, is because the share price was down a lot more than the other stocks I was considering, but there is some other reasons as well. In general, there was a lot of companies I could have bought this week. We had a little bit of a dip, but I was like, hey, just control yourself a little bit, don't go buy everything at once because we have a bit of a dip. But these are 3 opportunities that I did take, and I'll go through the reasons why today. Now, if you do want to know when I'm buying and selling companies in real time, make sure you join the Patreon. There's a link in the description. I always post when I'm buying and selling companies in real time there, not a week later after it's happened. So if you do want to join, that link's in the description. We do currently have the highest, or one of the highest, I haven't found anyone higher just yet, of percentage of subscribers that convert to Patreons. It's the highest, I believe, on the stock market scene on YouTube, which is something I'm massively proud of. And yeah, I try to put a lot of content. It's only £5 a month. I try to put 2 videos on there exclusive a week, as well as buy and sell alerts, as well as a Discord on there as well, which has over 600 members on. So if you do want to join, that link is in the description. Like I say, it seems like it's going quite well at the moment. And if you do want to start investing, there's some links to some brokers in the description. If you join through the free trade link, you also get a free share as well. But anyway, getting on to this video on the 3 stocks that I bought. Like I said, last few weeks, and you guys on the Patreon know this, my main objective was to build up the cash pile because the stock market was going up and up and up. But we have had a bit of a slow decline now this week in particular on the stock market, which made some buying opportunities. There was quite a lot out there, and I had to kind of just make sure that I didn't just burn through my cash pile very quickly. So I just nibbled at a couple of things, and these are the 3 that I did nibble at. There could have quite easily been a 4th stock on this list, which would have been Gang. But Gang, when I went to go buy it, Gang is a company that I own in my Giro portfolio. And if I want to buy anything on my Giro portfolio, basically I have to have money transferred into there, and it takes 24 hours for it to go into my account. So I saw Gang down at $15, transferred the money into my account, and wouldn't you know it, before I could buy the next day, Gang, for some reason, well, obviously to show off, but if I could have just left it one more day, they came out and reported preliminary earnings, and the stock went up 18%. I was like, I was just going to buy it at $15, and they did that. Don't get me wrong, I was looking at the earnings going, these were absolutely amazing, but I was slightly gutted because I wanted to buy it at $15 and I didn't. Now, the thing with that is that potentially when you have a jump like that, a big jump like that, my feeling is that Gang will probably pull back in the next coming few days. It kind of did that on Friday in particular as well, but maybe even next week it does have a few days of actually pulling back, and then I might be able to buy a bit more into Gang, because after them earnings I was like, wow, that is just so impressive. So I do want to buy some more shares in Gang. It should have been on this list, but hey, they decided to bring preliminary earnings out. They were absolutely blowout, so yeah, I won't moan too much about it, but we'll go on to the 3 companies that I did actually buy. So number 1 on this list is Alibaba. So I actually bought this one only yesterday. I bought it about 10 minutes before the market closed for the weekend. And I'll be honest with you, I have been looking at Alibaba all week. I've been reading a lot of articles, I've been going through a lot of the financials again, and I've just been looking at it going, I really want to buy this. But there was something about it that just was putting me off buying Alibaba. I think the reason that I kind of got put off buying Alibaba is that historically I've always bought Alibaba in like the $170, $180 range. And I was kind of thinking, I wonder if it'll get there. I wonder if I can buy that opportunity. And I thought, you know what, eventually I got to the point where I was like, this is actually such a good opportunity that, you know what, even if it does go down to $170, $180, then I could just buy again. And I looked and I thought, you know, we're not that far off. I think this is a big massive dip it's on. Let me just buy some, because I've been thinking about it all week, and I did eventually go buy some shares into this one. Now, Alibaba at the moment is obviously, it's the only Chinese stock on this list that I actually bought this week, but obviously Alibaba, I covered it on yesterday's video, basically saying, you know, look, Chinese stocks are getting hurt a lot more. And one misconception that I'm seeing quite a bit on YouTube actually recently is that everyone's kind of going, oh, Chinese stocks are down because of DD, and the fact that the Chinese regulators might be getting a bit tighter on how Chinese stocks work, because it's a long story, but basically when you actually buy Chinese companies, they're actually not actually buying shares in the proper company, because foreign investors aren't allowed to buy Chinese companies. It's a really long story. It's probably a video on its own, to be fair. And basically there's a lot of things that people are looking at getting these regulations a bit tighter, even making it harder for a lot of these Chinese companies to go onto the US stock market. And I've seen a lot of people like focusing on that point of view, and saying that this is why a lot of these Chinese stocks are down. But this is only something that's happened, this DD situation, it's only happened something that's really happened this week. A lot of these Chinese companies have been down for pretty much 2021. These stocks, a lot of these Chinese stocks have been downtrending for a very, very long time. And it's not just because of this week why these Chinese stocks are down. It's been a long period of time. And over that long period of time, what has happened over this course of probably 2021 is that every so often, the US media in particular like to be very negative on Chinese companies. And one thing that they've been pushing out quite a bit in 2021, which happens, I think I have seen this every year since I've been in the stock market, is they always push out this negativity about Chinese stocks, and also they push out these fears of delisting about these Chinese companies onto the US stock market. And it's just something that gets pushed every year. It's just at certain times it just gets pushed a lot more. And over the last year, that's been pushed a lot more. And that's the whole reason why Chinese stocks are down. There's a lot of people out there that are negative on Chinese companies, and especially when momentum builds, like how it's building right now, and these Chinese stocks go down and down, it gets louder and louder. It's one of those, it's like a game of Chinese whispers, really, that eventually if you spread it something enough, then it starts getting momentum and it gets talked about a lot more. It's very similar to the situation where people talk about like stock market crashes. Like every kind of month you'll hear someone go, oh, we're in a bubble, the stock market's going to crash. And eventually at certain times it gets louder and louder and louder, and then it fades out, and then we start again. And it's one of those that it's always going to happen. It's probably going to happen in 3 years from now, 5 years from now, from 10 years from now. But my big thing is looking at this and going, realistically, how much is this going to bother Alibaba? And in my opinion, do I see Alibaba getting delisted? No. Do I see Chinese stocks getting taken off the US stock market? No. Do I see China taking or stopping Chinese companies coming into the US, going onto the US stock market? No. I think if we ever had any situation where this got very intensified and these sort of things happened, we won't be talking about, that company Alibaba is going off the stock market, or it's not allowed to IPO, or it's not allowed to do something. That would be the sort of situation where we wouldn't actually be talking about Alibaba anymore. That sort of stuff would escalate into stuff where we are actually talking about the world economy getting affected, people's investments getting affected, the US stop trading with China stops trading with the US. Like we would be talking about a big economic crisis if these sort of things started happening. This is just, in my opinion, China just tightening down on the situation, making sure that their companies are legit companies and not cutting corners. DD are getting into these problems because it cut corners, and China wants to be seen as a legit country that regulates everything, and they're going, you can't do that. And I think what China are actually doing at the moment is the correct thing. And with regards to the US side of it, there's always going to be people in the US that do hate Chinese stocks, and that's something you got to live with when you invest into Chinese companies, I guess. But as always, I talked about in 2018, you look at 2018, probably the last time that the momentum of hate to Chinese stocks was massive. You had companies massively sold off. You bought on that dip in 2018, you made a lot of money now. And that's the thing, you just got to look at these kind of things and think, is this an opportunity? I look at Alibaba and I look at what they have. Amazing company with amazing brands. You look at the brands they own, massive amounts of brands. They're in pretty much everything from payment, social media, streaming, shopping, multiple e-commerce sites as well. Basically, if you're living in China, you're probably using an Alibaba product, as well as all the little mini other investments that they have going on. You look at the company as well, you look at what they're going to do over the next few years, the profit growth is really good. You look at what they're going to do on the revenue increase is going to be fantastic. Everything from that point of view, where the company is going to be growing, is really good, just like how it's been for the last few years. You look at Alibaba now as the valuation. If we take a look at the stock chart, the company's massively sold off. We're basically near kind of like the CV dip. So that shows you how much we sold off. So yeah, it's the lowest point that Alibaba has been for a long time. And whatever valuation metrics you want to look at, if you want to go on the P ratio, I think we're at a forward P of like 16 at the moment, but even now, the P is the lowest it's ever been. You look at the price sales ratio, the price sales ratio is the lowest it's ever been as well. And you're just looking at this company thinking it's massively sold off. And like I said, I think there's an opportunity where it actually could go a little bit lower, but I look at Alibaba right now, it's a great company, great growth with all the investments they have going on. And when you look at long term, if the company grows at like 20-30% a year, in 5 years' time, we're going to be talking where Alibaba is doing like over double the revenue where it is right now, over double the profit where it is right now. And you look at the companies at like the lowest valuation it's ever been, and you're like, is this company going to be the same price in 2, 3, 4, 5 years time? In my opinion, it's not, and I'm taking this opportunity to go buy it. And I think, in my opinion, this company is easily a $300 stock. And yeah, last time I bought Alibaba in the dip, I think I bought $170. I sold in August, I think it was around about $310. Made some good money on it, and it's another opportunity has come around quicker than what I thought it would. And here we go. I'm going to take this opportunity. I think I could make some good money on it. So number 1 is Alibaba. Number 2 is Gnog. So I bought some more shares in Gnog. I believe it was Wednesday when it was on a bit of a dip, and since then it actually has put a little bit of a recovery in. But the whole sector that this is currently in, Gnog, like with your DraftKings and your gang, it is kind of getting hurt a little bit at the moment. I think the big thing for me is this industry here that Gnog are in is still not being recognised as like how big it's going to grow. And I think when you look at the numbers that Gnog, Gang, DraftKings are pulling out, these companies are growing even faster than what people thought they would grow. It's growing faster than what I thought it would grow as well. And you look at these companies and they're performing a huge amount, and people are still not recognising how big Gnog, Gang, DraftKings are going to be. Because I nearly considered, I was going to buy some more Gang. I even considered buying some DraftKings. This whole industry is going to explode. And what people don't realise, the companies like Gnog's in like 2 states, I believe. I think it's only at the moment in Michigan, and it's only in New Jersey. By the way, New Jersey as well, it's a profitable state. So, the aim for Michigan is to get to profitable, I think, in the next 2-3 years. And these guys are only in 2 states, and this company is growing currently at 50% revenue growth. And you put that into consideration of like, they're in 2 states. You think about if they can just carry on adding a state, maybe every kind of quarter, you think about what the growth that this is going to have is going to be unbelievable. Now, they do have agreements to go into some other states as well, so that should be happening sometime soon. One of the big criticism that I'm seeing to Gnog is that they are halfway through the year. We're in July now, I know it's June, we're even in July, and they are still only in, as far as I'm aware, New Jersey and Michigan. So these guys were saying they were going to be, I believe it was in 8 states by the end of the year. So this progress of expanding the states looks like it may be going a bit slower than what people expected. And I think that's what maybe causes some pressure, as well as this whole sort of industry. You look at Gang, DraftKings, they're all 3 of these companies in this sort of industry are kind of getting disrespected at the moment. And so I actually asked the other day what I mean by that. So when you look at Gnog, if you look at the share price is like back at where it was 12 months ago. And you look at what's happened with Gnog since 12 months ago, compared to where the share price is at. Gnog in the last few months has increased its revenue by 50%, and the company is still going to be valued at what it was a year ago. Do you think if you had a company and someone wanted to buy it, and 12 months ago they gave you an offer, and in the next 12 months you increased your revenue by 50%, would you think it's fair for that same guy to come in 12 months later and offer you the same offer for your company 12 months after you've just grown revenue at 50%? It just doesn't make sense, does it? And this is what I mean by like Gnog being disrespected, is the share price isn't reflecting how Gnog's performing. It's the same with Gang. Gang, you look at that one, the share price is not reflecting. The company's just grown 100%. And the company is valued what it is valued at over a year ago for them guys. The company's actually valued at what it was at a year and 2 months ago. DraftKings just grew revenue at 130%. Theirs isn't as bad as what Gnog and Gang is. DraftKings is still valued at like I think it's something like a 16 price to sales ratio or something down that sort of lines. Whereas Gnog is still like I think it's something like a 5 or 6 price sales ratio. So this company is, from what is happening, is getting disrespected from the share price point of view because it's doing absolutely amazing. And in my opinion, Gnog as well is like, they will expand states. A few people worried that they're doing it a little bit slower than what you would think they would go, what you were considering how many states or contracts they have and how much they said they would expand. And probably a little bit, you would hope they would probably have another 3 or 4 states online by now. But the company's still performing excellent on financial wise. And these guys are going to expand probably a little bit slower than the likes of DraftKings. They're not going to put as much money into expansion and acquiring customers. But that also means that they're not going to need as much money. You also, the big thing with Gnog is you're also getting an established brand. So people always will already recognize this brand as well. one thing that I've always had with Gnog is people say, the balance sheet isn't amazing, which I've always agreed. The balance sheet was the one thing that kind of held me off buying this one for a little bit. But when you look at the company now and you're thinking the rate they're growing and the valuation that this is at, in my opinion, this is a great opportunity, and there's no way this company should be valued at what it was 12 months ago, in my opinion. So yeah, I picked some more shares up while this was kind of like around the $11, $12 range. And number 3 was a UK company, which was Best of the Best. So I bought some more shares in Best of the Best. I actually doubled my position in Best of the Best. I've been thinking about doing it for a while, and eventually got to the point where I was like, okay, this is the right time to do it. I think I was down something like 28%, and now I'm only down like 13% after doubling my position. The position size is getting a bit bigger now. It's kind of, I believe it's my 6th biggest UK holding. If it's not my 6th, it's about my 5th. So it is going up a little bit here from now. I looked at Best of the Best, and one thing, obviously the share price is being spooked. Like, the company has lost so much value over the last few months. And I looked at this and going, is this an actual true reflection? Should this company be at this sort of valuation? Is that drop off in the share price justified? Because my biggest thing, what I do is I love to see great companies that their share price isn't reflecting how the company's performing, or some negative news has come out, and I look at that and going, is that a fair drop, or has this drop been overdone? And in Best of the Best case, I look and I think this drop is way overdone. Like, this company should not be down at this valuation. Like, it's lost over half its value within a couple of months period. And I looked at Best of the Best, and basically I think the big thing is, like, these guys went to an online platform a couple of months ago, and they tied it perfectly because you had the CV situation, revenue exploded, and now they had the latest earnings, and the revenue is kind of still growing, but it's slowed down. And people have took that into the point of view of like, oh, it's, it was a fluke and everything like that. But realistically, a lot of these companies like Best of the Best, they aren't going to be able to do them CV numbers all the time. That situation has massively helped them. But what are they going to do in the next 1 year, 2 year, 3 year, 4 year, 5 year? And, revenue still grew from where it was at, which I think is really impressive. To have a situation where you've had pretty much everyone at home through your first half of trading, and then in the next half of trading, you then actually beat them numbers when everyone's back at work, everyone's back out again, everyone's going back to the cinema, going out to restaurants, I think it's really, really impressive. And there's no way Best of the Best are going to grow at what they've just done. It doesn't take a genius to realise that they are no way going to pull out the numbers that they did in the CV situation every year again. And I thought people realised this. I thought people invested in this company realised that situation. And I was wrong. And sometimes one of my things that I think I sometimes overlook massively is I forget how short term people can be, and how short term people get affected by share price movements, and actually don't look at the situation and go, but it's still a great company, and in the next few years it's going to be amazing. And I forget that people only look at sometimes at companies, and even so-called long-term investors look at companies for the next kind of 3-6 months and think how it's going to perform then. And this is, for me, Best of the Best is exactly that. I'm looking at Best of the Best and thinking people are only looking at what this company is performing in the next 3-6 months. They're not looking at this company and what it's going to do long term. And this company is massively sold off. And I think people are just spooked that the growth is slowing, but it's always going to slow. This company isn't going to grow at 100% a year. This company is going to grow at like 10%, 20% a year. And that's still fantastic growth. For a company to grow at 10, 20% a year is still really, really good growth. And the profit growth is going to be amazing on this one. The balance sheet is so impressive. And in my opinion, now I've got the company at half its value. The company's trading at like a 13p ratio. I have never seen a company that trades at a 13p ratio that has the growth that Best of the Best has, the profit that the company has, and the balance sheet it has. And the thing is that I sometimes think people don't realise is that I am playing this that the share price will go up a fair bit, but the dividend, this is a beast of a dividend company. This is a massive dividend growth company. These guys have the potential to up their dividend a huge amount. I think the payout rate is already really good, but as well as getting like a strong yield already, this company only pays a 4% dividend payout. So what I'm getting here is like an amazing growth dividend company that is at a 13p ratio that's going to offer me 10-20% revenue growth. And that's insane, because you look at the likes of like Illegal in general, for example, or another dividend company. Them dividend companies are trading at like a P ratio of like 10, 15, 20. And them companies grow at like 2-3% a year. This company is going to grow triple, quadruple that. You're getting a growth company and a dividend company at the valuation of a dividend company. And I think that's just really, really impressive. So even if it doesn't perform on the share price front, which I think it will do because we're on a massive drop. We're at a P ratio of 13. In my opinion, this should be at a P ratio of like 30, double where it is right now already. But the thing is as well is like, I compare that to likes of like a Boohoo, for example, or another company. I'm not just getting a growth company here on the revenue front, I'm getting a dividend growth company. The combination of absolutely amazing things here. And like I said, I think that in the short term, sure, it's going to have a bumpy time. Adjustment from how well it's done in the CV to normality, it's going to happen. But past that, the next 2, 3, 4, 5 years, when this company regularly puts in decent revenue and profit growth in this dividend, I think this is a really, really a good opportunity. So yeah, I did buy some more shares in that one. So yeah, I hope you enjoyed it. The 3 stocks I bought this week. As always, smash the like button if you're new, subscribe. Let me know what you bought this week, and I'll see you next video.